Cost concepts. Hello all. Accounting is often referred to as the language of business. Learning the language requires that you are familiar with key terms and understand basic concepts. That's what this module is all about. The focus for this video is on cost concepts used in managerial accounting. Managerial accounting transforms data into information. It is the process of identifying, accumulating, measuring, analyzing, preparing, and communicating information so that business decisions can be made. As a future manager, you will take these steps to build value for your work team, your company, for your investors, your customers, and your community. As you study this module, you will be introduced to a number of cost concepts. Your goal is to learn the difference between 1. Manufacturing and non-manufacturing costs. 2. Product costs and period costs. 3. Direct costs and indirect costs. 4. Fixed costs, variable costs, and mixed costs. 5. Various costs related to decision making. And 6. The traditional format for income statement and the contribution format for income statements. Sounds like a lot, but a lot of good stuff is here. As you study this module, envision yourself working for the Trek Bicycle Corporation. Trek is a leading manufacturer and retailer of bicycles today. They make their bicycle products and sell them online or through retail outlets. As an organization, Trek has both a manufacturing and a non-manufacturing component. The bicycles are built in the manufacturing facility, while the daily operations are run through the administrative offices. To be successful and make a profit, the folks at Trek must know how much it costs to make their bikes and to run their offices. Once they know their costs, they can price their products to make a profit. For Trek, the cost object is the bicycle. That's what they're building. That's what they want to determine the cost of. The costs to make a bike are called product costs. And those product costs include materials, labor, and manufacturing overhead. These costs can be fixed, they can be variable, or they can be mixed. Variable costs increase as production rises and decreases as production falls. Fixed costs, on the other hand, are costs which remain the same no matter how much is produced. If it's a mixed cost, then it has both fixed and variable components. In addition to product costs, Trek incurs period costs. The period costs are the costs to run the administrative offices and their retail outlets. These costs include selling general administrative costs, or SG&A, and are the expenses needed to run daily operations. It's important that you recognize the difference between product costs and period costs, and that you realize product costs are all the costs needed to produce the cost object. For Trek, the cost object is the bicycle. For Trek, the product costs are all the costs needed to manufacture that bicycle. It includes the materials, the labor, and the overhead. Materials which can be traced directly to the bike are called direct materials. Direct materials include the frame, the saddle, the handlebars, the wheels, the pedals, and the brakes. You can trace them directly to the bike just by looking at them. On the other hand, there's indirect materials as well. Indirect materials include things like glue, oil, screws, lugs, tape, paint, cleaning supplies. These are all indirect. They too are part of the production process, but can't be linked directly to the specific product or job. Materials, labor can be either direct or indirect. Direct labor refers to the cost of those individuals operating production machinery or working on the assembly line, while indirect labor refers to the supervisors, janitors, quality control individuals, and maintenance workers. Manufacturing overhead, which is the last of the product cost, is an indirect cost. It's indirect because it's part of the factory operations, can't be traced directly to any individual product produced, but important to the process. Manufacturing overhead includes the cost of utilities, the cost of factory rent, the cost of depreciation of the equipment, and property taxes. As you develop a decision-making strategy, you will distinguish between relevant data and irrelevant data, sunk cost and differential cost, committed cost and discretionary cost, and opportunity cost versus out-of-pocket cost. The story of operating performance is told by the income statement. During this module, you will be introduced to the contribution income statement, an income statement format which is widely used by managers for decision making. During your careers as business professionals, you will find yourself faced with challenges, choices, and problem solving. Understanding these key cost concepts will provide a solid foundation for successful decision making. Thank you for viewing this video. Good luck.